A viral video shared by a YouTuber called China Observer claims that BYD's debt is getting to crisis levels. They have more than 73 billion US dollars in debt. And here we go. Rapid expansion plans raise concerns of Evergrande repeat. This video has more than 320,000 views. And about 99% of the people who watched it believe it's actually true. Now, a quick 2-second Google search would reveal the fact that this is entirely made up. It's fabricated, it's bogus, and these pretend China Observer YouTubers are kind of taking advantage of, to be honest, mostly gullible Americans who really want to believe that, well, for example, BYD are about to go bankrupt. Here are the real numbers behind BYD's debt. Here are the real details. And here's the true story. Hello, my friends. Welcome to the channel. It's great to have you with us. I'm Sam Evans. You're watching The Electric Viking. I want to say a big thank you to our Patreon supporters, guys. Thank you to those of you who have jumped on within the last few days and supported us on Patreon. That's huge. I couldn't do this without you. I'll put a link in the description. China Observer has more than 500,000 subscribers, and yet, for some reason, they find it necessary to outright lie. Does BYD actually have $73 billion of debt? No, it does not. The funny thing is, there are many automakers that have more than $73 billion in debt. Volkswagen and Toyota have around $180 billion in debt. In the case of the Volkswagen Group, though, much of their debt, around $70 billion, is finance debt. So it's essentially loans to businesses and consumers. Toyota, only about 10% of their debt is finance debt. So actually, Toyota has a lot more bad debt than the Volkswagen Group has. And the Volkswagen Group says that their debt is unsustainable. They say the house is on fire. There is a crisis at the company. What does that mean for Toyota? Well, you make your mind up. But it certainly means that BYD are in a much better position than Toyota when we actually look at their debt. Who else is in a bad position? Well, for example, Nissan. Nissan's debt is rated at junk. Seriously, this is true. And Nissan knows it's in a crisis. It's firing thousands and thousands of staff. It says it is in a crisis. Nissan has major problems. I made a video, and this is true facts. Even Nissan themselves have publicly stated that. I'll put a link in the description to my video about Nissan. What about Ford? Ford have over $100 billion in debt. So does General Motors. All of those things are true facts. You can easily find that information. As for BYD, well, BYD's debt is quite a lot lower. In fact, BYD have only $13.6 billion US dollars in debt. Big difference to $73 billion that this YouTuber claims that they have. Now, considering the fact that BYD have enormous amounts of cash on hand, more than enough to pay off their debt tomorrow if they were so inclined, I would say BYD's probably not in a really bad financial situation as this YouTuber claims. So there you go, put it to rest. Now I'll put a link to their video in the description. If you want to go there, maybe just downvote the video. You could even actually do a report on the video because honestly it's just spreading completely false information and lies. And this is kind of one of the things that sucks. You know, YouTube can be a good source of news and information, but if people are going on there and just intentionally lying, it's probably better if we, fix that. I think it is anyway. What do you guys think? Now, if you'd bought BYD stock 5 years ago, you'd be in a pretty good position. The stock has risen by 597% over the past, 4.5 years. 597%. Now, that's not as much as Tesla, but it's still a pretty damn good return. That said, Warren Buffett, who purchased BYD stock in 2008 and has made billions of dollars from that, it was one of the savviest investments he ever made, has been selling down BYD for quite a while now. In fact, he sold BYD stock on numerous occasions over the last 18 months. A Form 2 filed with the Securities and Futures Commission of Hong Kong, known as the Corporate Substantial Shareholder Notice, on July 16 notes that 1,400,000 shares of BYD were sold at an average price of 247 Hong Kong dollars or 31.76 cents per share. This equates to $44 million US dollars in proceeds for Warren Buffett's Berkshire Hathaway. Now, you might be thinking to yourself, well, maybe that's because BYD is doing badly. Is that why Warren Buffett is selling? But there could be an alternative reason. The Oracle of Omaha's massive selling of Apple and Bank of America and General Motors may have something to do with some combination of corporate taxes and a pricey stock market, and the fact that maybe Berkshire believe that those stocks are not performing as well as they could be, or those companies are not as sound as they first believed when they purchased them. But the modest selling of BYD is solely designed, say some experts, to get Berkshire's stake in the company below the 5% threshold that requires Form 2 filings. Following this sale, Berkshire's stake in BYD dipped from 5.06% to 4.94%. In terms of operating performance, BYD has given Berkshire's top investment minds no reason to let their proverbial feet off the accelerator. BYD's third quarter profits were up by double digits, with sales for the company topping North American EV giant Tesla. And in fact, they also topped Nissan. BYD will outsell Nissan this year, and not only outsell it, it will also make more revenue than Nissan. Nissan, which have been in the headlines for all the wrong reasons and were again last week slashing payroll, production, and forecasts for this fiscal year, may be another to lose out. The struggling Japanese automaker is on track to fall behind BYD in revenue and sales this year. BYD is riding high in terms of the most valuable automakers by market capitalization. So BYD's stock price has certainly had a meteoric rise. Back in June 2022, when BYD's Hong Kong listed stock hit an all-time high, the Chinese carmaker was worth more than Ford, General Motors, and Stellantis combined. It almost achieved that goal again last month as the US automakers' woes deepened, but didn't quite get there. But to be honest, it's only a matter of time before once again BYD is worth more than Ford, GM, and Stellantis combined. Is the company worth that much? Is that logical? Well, fresh from besting Tesla on quarterly revenue for the first time as an electric vehicle company, BYD now has the legacy automakers in its sight. Now, make no mistake, BYD is not just an automaker. It makes parts for vehicles. It makes motors. It makes batteries. It makes components. It makes chips. It literally does everything. The extraordinary sales volumes being pumped out by China's best-selling car brand means BYD has a shot at beating Ford Motor Company in annual shipments this year, a milestone that would cement its position as a top 10 automaker globally. However, it's not obviously resting there. I mean, many analysts believe BYD will outsell Toyota by 2030 and become the largest car maker in the world. If you look at the trajectory right now, it does seem pretty likely that's going to happen. BYD kicked off the December quarter by selling a record 500,000 vehicles in the month of October. And almost all analysts covering BYD expect the momentum to continue. The US automaker, which only reports global sales on a quarterly basis, has been averaging around 1.1 million vehicle sales per quarter. Getting to 4 million is a stunning milestone, auto industry analyst Michael Dunn said, referring to BYD's reported annual target. BYD will soon be seeing Ford in the rearview mirror. Surpassing one of Detroit's big three car makers, it will be certainly possible if BYD keeps up its strong run. Demand in China is in part being stoked by government subsidies, encouraging people to trade in their older cars for EVs. Basically, the Chinese government is definitely helping with BYD's rise, but that doesn't mean it's about to stop anytime soon. BYD's lineup of hybrids is resonating with consumers who aren't quite ready to buy an EV, and their plug-in hybrid sales have been growing at an exponential pace. Dunn, a former General Motors executive, described BYD's sales ramp up as velocity without precedent. BYD's third quarter set the tone for what's possible. The Shenzhen-based auto giant managed to outsell Ford by 40,000 units, delivering 1.13 million, mostly passenger cars, as well as trucks, buses, and of course, a whole lot of batteries. Now, those batteries go to many different car makers. BYD supplies Tesla with batteries, they supply Mercedes, they supply Toyota, they supply numerous other automakers outside from their own vehicles. Legacy car makers like Ford are finding the competitive landscape increasingly tough as automakers from China expand everywhere. From Southeast Asia to Europe and Latin America, Nissan Motor Company, Volkswagen AG, and Stellantis are all confronting crises around shrinking profits, excess capacity, and bloated workforces. Ford may find support under President-elect Donald Trump, who's pledged to rescind funding for the Biden administration's signature 2022 climate law, which includes more than $8.5 billion in incentives for individuals and families to decarbonize. But, BYD doesn't sell cars in the United States, so that's irrelevant for them. So therefore, it's unlikely to have any effect on the company whatsoever. Senior Vice President in China bragged on his Weibo account earlier this month that BYD increased production capacity by almost 200,000 units in the August to October period by hiring around the same number of people for its assembly and components businesses. BYD's output for October was 534,000 units. BYD has no peer in the world right now, said Tu Li, founder of Detroit-based automotive advisory Sino Auto Insights. Legacy automakers just seem to be collateral damage as BYD goes like a freight train toward becoming the largest automaker in the world. BYD currently sells electric cars and plug-in hybrids priced from around $10,000 all the way up to more than $150,000. They sell supercars now as well that are priced at over $200,000. They're refreshing their lineup continually. That includes new models for their premium Denza, Fangcheng Bao, and Yangwang brands. BYD recently took full control of the Denza brand, buying the last 10% owned by Mercedes-Benz. They now have 4 well-known brands inside China. A recently launched 5th generation hybrid system offers a claimed 2,100 kilometers of range. That's 1,305 miles in combined battery and gas range. The system is being rolled out to new and existing models and is fueling booming orders. Toyota claims that they will be using this system in their hybrids in 2026. Kind of shows you just how good that system actually is. Improved driver assist systems and faster charging are expanding to more of BYD's lineup. Overseas sales have declined as a share of total sales in recent months. That's true, and that is a concern. But BYD has big plans. Export logistics have improved in terms of ships and rail. BYD now has its own car carrying ships. In fact, it has 5 of them. BYD's brand new Thailand plant, its first full assembly plant outside of China, has begun deliveries. There's also a knockdown plant in Uzbekistan, which puts together partially assembled vehicles. A Brazil factory is due to fully open in 2025, and the EV giant has plans to build factories in Hungary, Indonesia, Turkey, Cambodia, and Pakistan. Turkey has a customs union with the EU. That, along with the Hungary plant, will be 2 factories for Europe. And this is how BYD essentially get around the European taxes on electric cars, on Chinese-made electric cars. The Cambodia and Pakistan plants will likely be knockdown plants as well. The EV giant is close to choosing a Mexico site and is planning on potentially setting up in Vietnam as well. BYD makes EV buses in California and trucks as well, but says it's had no plans to enter the US passenger EV market amid import tariffs and political opposition, of course. Trump has said he wants Chinese EV makers to build cars in the United States. So it is actually entirely possible BYD could take Trump's offer and set up a factory in the US. But that's not all for BYD. BYD does other things as well, and it does them quite well. BYD notably makes its own chips. That, along with in-house batteries and other vertical integration, makes BYD a low-cost EV maker. In fact, at this point in time, BYD is the only car company outside of Tesla that can make any kind of profit selling electric cars and plug-in hybrids. Now, yes, its profits are very slim, but it's certainly better than making a loss like everyone else does. The EV and battery giant also has solar operations. BYD is introducing level 2 driver assistance systems in its premium brand models, as well as more mainstream BYD brand offerings. Those services have been introduced in the premium Denza line and have started to filter down to its higher end BYD brand EVs over the coming months. BYD does struggle with software in its cars, but it has gone on an absolute insane hiring spree. It's hired almost everyone it can get its hands on in order to reinvent its software, improve its ADAS systems, and really make sure that Achilles heel is no longer an Achilles heel. BYD reportedly aims to start equipping lower-end models with higher-end driver assistance next year. BYD is largely known for its automotive operations. BYD Electronics, which accounts for an increasingly smaller share of overall revenue, is involved in mostly low-margin businesses such as smartphone components and assembly. They make Apple iPads, for example. But margins are improving there as well. So what about BYD's earnings? How are the company actually going on a financial basis? And this is probably crucial if you're watching this video. This is what you want to know. BYD's Q3 earnings rose 16%, slightly above consensus. Sales jumped 29% to $28.7 billion, with growth accelerating for a second straight quarter, but just missing analysts' expectations. However, BYD's revenue topped Tesla's for the first time. BYD's gross margin was 21.9% versus 19% a year earlier. Essentially, the gross margin has increased by 2%. BYD auto margins popped to 23.51% versus 22.51% in Q3 of 2023. Auto margins have improved as well, which is quite staggering. Now, of course, vehicles do get subsidies in China, but that does not account for pretty staggering gross margins of 23.5%. Even if you were to remove those incentives, BYD could still be profitable, which is staggering. R&D and capital spending costs continue to climb rapidly, as you would expect for a company that is doing this, expanding at this rapid pace. The rapid pace of expansion is staggering, but BYD has plenty of cash on hand. As I mentioned earlier, it has enough cash to easily cancel its own debt if it was to choose to do so. Now, yeah, there's more to this story, of course. If BYD debt can become a problem when it doesn't even appear that it could be. Here's the thing. Nissan is going to struggle to pay its debts over the next 12 months. It has a debt bomb coming. That is a true fact. Debt and other liabilities become risky for a business when it cannot easily fulfill those obligations, either with free cash flow or by raising capital at an attractive price. Ultimately, if the company can't fulfill its legal obligations to repay debt, shareholders could walk away with nothing. However, a more usual but still expensive situation is where a company must dilute shareholders at a cheap share price simply to get debt under control. Of course, plenty of companies use debt to fund growth without any negative consequences whatsoever. But when we look at debt levels, you have to consider both cash and debt levels together. Now, technically, at the end of 2023, BYD had around 25 billion RMB in debt, which is only about $5 billion US. But at the same time, it had about $8 billion in cash. So even at the end of 2023, it could have easily paid off its debt completely if it wanted to. Now, of course, Tesla's in the same situation. In fact, Tesla has a fair bit more cash on hand than BYD has. But BYD's latest balance sheet data shows that they had liabilities of Chinese yen or RMB $420 billion due within a year, and liabilities of 63 billion RMB falling due after that. Offsetting this, it has 66 billion in cash, this is RMB, and 97.5 billion in receivables that were due within 12 months. So its liabilities actually outweigh the sum of its cash and near-term receivables by 318.3 billion RMB, or around about $50 billion US. While this might seem like a lot, it is not bad, since BYD actually has a huge market capitalization of 616 billion RMB. So if it wanted to, it could easily strengthen its balance sheet by raising capital. But it's clear we should definitely closely examine whether BYD can manage its debt without dilution. BYD actually grew its EBIT by 126% last year, which is a huge improvement. And that boost makes it even easier for BYD to pay down debt going forward. When analyzing debt levels, the balance sheet is the obvious place to start, but ultimately the future profitability of the business will decide if BYD can strengthen its balance sheet over time. Now, although BYD's balance sheet isn't overly strong, and yes, Tesla does have a better balance sheet at this point in time, now that's mostly due to their total liabilities. It is still clearly positive to see it has net cash. It has a large amount of net cash. And it also has a lot of free cash flow at RMB 14 billion, being 164% of its EBIT. So is BYD's debt a risk? Well, It doesn't seem so to me whatsoever. Above most other metrics, I think it's important to track how fast earnings per share are actually growing, if at all. Now, as you can see, BYD's earnings per share continue to rise. And therefore, it appears to me, if you combine this with BYD's strong balance sheet and its growing car sales, its growing an historic pace, along with its growing battery business and also its ability to sell electric cars at a profit alongside Tesla, which is something that no other automakers have yet been able to do. It seems to me that this whole idea that BYD could potentially become the next Evergrande is entirely fictional and has been fabricated by a YouTuber in order to get you to click. Let me know what you think though in the comments below. Bye-bye.